Bitcoin. It's a word that's pretty much everywhere these days, right? But its story? Well, it's packed with mystery, some huge turning points, and honestly, a lot of confusion. It's gone from this tiny little idea on a cryptography forum to a global financial asset. So the question is, how on earth did we get here?
Okay, so here's how we're going to break this all down. First, we'll look at Bitcoin's very first baby steps into the world. Then we'll get into a really harsh lesson from its early days. After that, we're diving into the mystery of who even created this thing. And finally, we're going to tackle some of the biggest myths you always hear about it.
You know, every big revolution starts with just a small, simple step. For Bitcoin, it was never about changing the world overnight. It was really just about proving that this wild new idea for digital cash could actually, work in the real world.
So let's check out these first few critical moments. In January 2009, the Genesis block was mined. Think of that as block number 1 in the massive public ledger that is Bitcoin. It officially kicked the whole network off. Just 9 days later, the first ever transaction happened, from the creator to a developer named Hal Finney. But the moment that really showed Bitcoin could be used like actual money, that came in 2010.
This number right here, 10,000, this is what cemented Bitcoin's place in history. 10,000 Bitcoins. That's what a programmer named Laszlo Hanyecz paid to get 2 Papa John's pizzas delivered to his house. It was the very first time Bitcoin was used to buy a physical thing.
At the time, those 10,000 Bitcoins were worth maybe 41 bucks. Today, we're talking hundreds of millions of dollars. That one single transaction has become this legendary story, a perfect reminder of just how dramatically Bitcoin's value has changed, from a tiny experiment to a major global asset.
But, as Bitcoin's value started to shoot up, so did the risks. So we go from a celebrated first step to one of the most painful, brutal lessons in Bitcoin's history. The collapse of an exchange called Mt. Gox was a massive wake-up call for everybody involved.
In February of 2014, the crypto world was absolutely rocked by this number, 850,000 Bitcoins. That's how many were just gone, vanished from Mt. Gox, which was the world's biggest Bitcoin exchange at the time. It was a catastrophic loss, worth almost $500 million back then.
Now, it is so important to understand this. Mt. Gox was not Bitcoin. It was a separate, centralized company. You can think of it like a bank, but a bank for Bitcoin. People trusted it to hold their funds, and yeah, at its peak, it was the biggest game in town.
And this is the absolute key point. While Mt. Gox was in total meltdown, the Bitcoin network itself just kept humming along. It never stopped. It kept processing transactions perfectly. The failure wasn't the technology. It was the terrible security of a single company that people had trusted with their money.
This whole disaster gave us one of the most famous sayings in crypto. Not your keys, not your coins. See, your private keys are basically the master password to your Bitcoin. If you hand that password over to someone else, like an exchange, you're just trusting them not to lose it. You're bringing back the exact same central point of failure that Bitcoin was designed to get rid of in the first place.
Okay, so we've gone from a very public disaster to a very private mystery. Let's talk about the person, or maybe group of people, who started this whole thing and then just disappeared.
This is the great enigma, isn't it? Satoshi Nakamoto is the name used by the creator of Bitcoin. After releasing the software and kind of guiding it through its early days, Satoshi just vanished from the internet in late 2010. Hasn't been heard from since.
Over the years, so many people have tried to figure out who Satoshi is. The list of suspects includes early computer scientists like Hal Finney and Nick Szabo, and even a physicist who just happened to be named Nakamoto, but every single one of them has denied it, and there's never been any real proof.
But here's the really interesting twist. What started as this big mystery is now considered one of Bitcoin's greatest strengths. Because there's no founder or CEO, there's no single person for governments or big companies to pressure or influence. It guarantees that Bitcoin stays this truly decentralized project, run by code and consensus, not by some leader.
All right, so now that we've got the history down, let's use what we've learned to clear up 4 of the biggest, most stubborn myths that you still hear about Bitcoin today.
First up, the idea that Bitcoin is totally anonymous. That's just not true. The reality is that every single transaction is recorded on the blockchain, which is a public, digital ledger that anyone in the world can look at. Your real name isn't attached, sure, but the trail of money between digital addresses is completely out in the open and can be traced. And that leads us right into the second myth, that Bitcoin is just for criminals. Now, yeah, in the very early days, it was used on darknet markets. But because its transaction history is so public and permanent, it's actually a pretty terrible tool for crime. Today, illegal stuff is a tiny, tiny fraction of its total use, which is mostly dominated by investing.
Ah, this is a classic. But what is it backed by? People love to say Bitcoin has no intrinsic value. But think about it. Even the US dollar isn't backed by a physical thing like gold anymore. It's backed by trust. Bitcoin's value comes from a mix of its unique features and good old-fashioned supply and demand.
So what actually gives it value? You can think of it like four main pillars. First, there's scarcity. There will only ever be 21 million Bitcoin, period. Second, it has utility. It's a global payment system that no one can censor or shut down. Third, decentralization. There's no single point of failure. And finally, there's social consensus. Just like any other kind of money, it has value simply because a whole lot of people all over the world agree that it does.
And this brings us to our last myth, and it connects right back to what we learned earlier. People hear about crypto hacks, and they assume the Bitcoin network itself is easy to break into. But the core Bitcoin code has never been hacked. The failures we hear about are almost always thefts from those centralized banks built around it, exactly like the Mt. Gox disaster.
So when you look back at the whole story, from a pizza purchase to a catastrophic collapse to a creator who literally vanished, it all comes down to this one powerful idea: decentralization. So many of the myths just come from confusing the super resilient network with the sometimes fragile companies built on top of it. And that leaves us with the really big question: what does the future actually hold for a technology that has no one in charge?